back to the Berg podcast. Today we've got myself, Brian. With me is Ford.
Hey, everybody.
And Dan.
Hey, everybody.
And today we're talking about insurance, the necessary evil. A lot of people exactly. You know, it's funny. We were right before this started. We were talking a little bit about insurance commercials, right? And it's funny the way insurance companies market to you differently. And we got the chaos guy, right? We talked about
Mayhem.
Yeah, mayhem. Yeah.
He's my favorite.
Hilarious. We got the farmers guys. They're like, you know, what do they say? They're like,
The old grandfather that shows like all the things that they've covered over the years.
they cover it all.
Yeah,
right?
we covered that.
Yeah, exactly.
A moose hitting your house. We covered
We
that.
covered that.
Allstate, right? Allstate's hey, you know, you can have an accident. We'll forgive you. That's not a problem.
You're in good hands.
Yeah, you're in good hands with Allstate. But it's funny because, you know, we do. Insurance is a necessary evil. We have to have it. A lot of times what we hope for, right? The best case scenario with insurance is that we pay for something we don't need, right? That's the best case scenario. But there's some intricacies here, right? And we don't talk a lot about the impact of when things happen, because I think the common thought is you've got insurance, right? And that's not exactly the coverall umbrella that insurance technically is thought of as at times.
Now, can I take us off the path first? Because you missed one. Did you see the new NJM commercials? So that's a smaller, like, New Jersey company. And the guy says he got NJM and he got better than having some other animal. So the reference is the Geico gecko, but he's got the alpaca. Did you see that? And then the alpaca eats all his bushes. And the guy's like, is that good insurance? He's like, I don't know. I don't really know what it does.
There's a new one that's literally like the initials are like no mascots, no.
That's the
commercial.
NJM one too.
That's NJM.
That's it? Oh,
yeah, that's
right,
NJM.
right.
So the other
Right,
guy
okay.
has an alpaca, and the alpaca eats all his bushes.
Well, and there's the one that has
So
ostrich
they have
in
a
it.
mascot, even though their shtick
No,
is no mascot.
his neighbor got new insurance, and his new insurance is the alpaca.
I don't watch enough TV.
I don't watch TV either, but you can't miss insurance commercials.
I mean,
they're on constantly.
are we being sponsored by them? We're giving them a lot of good time right here, right?
Seriously. What was that
I
name
feel
again?
like we sponsor insurance companies. The only people we sponsor more than insurance companies, honestly, is GCs. I don't know if you
The
noticed
clients?
that. Yeah, the clients. We
clients.
finance every one of their projects.
It's true. Yeah. Short term, long term.
Short term, long term, maybe full term. At times, we've worked for some GCs. We just sponsor full term.
Yeah. But okay.
All right, but now we're back
How do we
to-
come back from that?
All right, so now what we're back
All
to.
right, we're
Any
good.
more
Thanks. Talk to you
commercials
next week.
So I think, Brian, the point we're trying to get to here is to really talk about insurance and how it impacts us, in how we operate, in how we obtain insurance to win jobs, in how it impacts our bottom line. Because as you were saying before I took us off the rails there, is in a best case scenario, we're going to pay for a service that we do not use. And it doesn't matter if it's our auto policies. It doesn't matter if it's our commercial policies, our umbrella policies, our health policies. In every insurance scenario that you run, we want to pay for a service and have to need it as little as possible, because anytime you need it, it means the next time it's going to cost you more.
Right.
And I don't think we think about that as a big picture, as a company. Certainly you and Ford and I, we have to deal with it because it's in our face. But it's one of the most unfortunate parts of how we arrive at a bottom line number at the end of the year. What was our profitability? Is these numbers that are automatic. We are going to pay this for insurance. It is X. And it's a big number. I mean, it's a surprisingly expensive number to pay for insurance for a company that is fairly successful at maintaining ourselves in a safe way.
Yeah. I mean, we talk a lot about safety. And we've actually made it, I think, more of a prominent piece of conversation in the last year, 2 years than we ever really have before. And our folks are good, right? We're really good. We have very few incidents. In fact, last year we had no incidents. I mean, that's something that not a lot of people can talk about. This year we've had a couple minor incidents already, right? And I think what some folks don't stop to think about is not only the impact, of course, of the safety component. Like, we don't want anyone to have an incident. We want to not have to worry about guys getting injured, et cetera. But even on the liability side, the risk management component is there. It's not so quite as simple as the insurance company's got it covered, right, Ford? I mean,
Well, exactly. I think that difference between personal insurance that you have for your house or your car is in commercial world. Yeah, they might cover you. They'll pay the claim for something to happen, but they're very good at getting back that money. So your premium is going to go up for the next 3 years to pay back whatever they covered. It's not going to be like, oh, yep, thanks, we got you covered. You've paid us for the last 10 years and didn't take a claim. No, it's going to be, we're going to now change what you have to pay so that we can make back every dollar, probably plus some for their profit margins or whatever it is, every dollar. And so all of a sudden that costs, we burden it for 3 years past the time that the event happened, if there was unfortunately an incident.
Right, and that depends on whether or not we even like get to a point where it's a claim, right? Or even if it is a claim, no, we follow a little different model than some other companies. We self insure pretty sizable chunk of most of our claim activity before we get to like a reinsurance or a carrier level. So, I think a lot of people don't realize that is, we are cutting that check. So, truck run, get some frame damage from a small incident. Not
Look at Brian being nice. Look at Brian being nice, not calling people out. That's why people like you.
I'm very PC.
Yeah, I know. Go ahead.
But it seems like a minor incident. It seemed harmless, but it's going to cost us about 20 grand, and the insurance company doesn't write a single dime of that, right?
But that also shows up,
yeah,
right? I mean,
yeah.
the insurance company isn't going to pay anything, but we're going to have discussions about it when they look at the loss run.
Oh, sure, yeah. And
So we're not only going to have to pay it, but then we're going to get charged for something that they didn't even pay for.
We write the check, and they hold the reserve in case there's additional liability. And next year at a renewal, they say, well, you had these incidents, and so now you're a higher risk, and you've got to pay us more money to cover you for the same exact insurance that we gave you last year.
Yeah, and I think if I get a little bit granular here, when Ford was talking about the personal insurance thing, so I think it came to my head an easy example. So there's a hailstorm blows through, and the hail messes up your roof, and you have homeowners insurance, and the homeowners insurance, everything goes well. Hail happened, they verify it, they replace your roof. Your homeowners really doesn't go up because it was an act of God, wasn't your fault. You get away with it. You're driving your car, a deer runs out in front. As long as you were doing everything correct, it's not your fault, your insurance doesn't go up. But in our world, commercially, it doesn't really matter how it happened. All that matters is that it happened and it goes up.
Well, right. And I think that there's so many factors to that. There's things that we might not actually had a claim. There might not have been an incident, but unfortunately someone got pulled over by the authorities and there was an issue on their truck that something wasn't done appropriate to the rules.
A load wasn't tied down correctly,
Right.
or
Seatbelt wasn't worn and stuff like that. There was no claim. There was no one hurt, but all that stuff is tracked by the government because we have a US DOT number and the insurance companies all have access to that. So even though no one got hurt, nothing was broken, all that stuff goes in and they have actuaries or basically people that sit behind and make models of what could happen. And they take that all into account and then they adjust what your rates are as a company.
Yeah.
And we're talking about, what is it? 7 to 8% of our total revenue is paid to insurance companies. 10%. I don't know the exact number between all of them because
it's significant.
Right. And we don't just have like, okay, we cover our vehicles. We have health. We have workman's comp.
Yep.
We have GL for the equipment.
Yep.
We have pollution control
Yep.
issues. We have what's the stuff?
Cyber.
It's cyber
Yep.
for internet. If something happens there.
Drone. We use drones, so we have to have insurance to cover the damage or liability of having drones. Yep.
And then another one that people don't really think of as insurance, but a bond is basically an insurance. So there's another group of funds that go out to pay for insurance. So there's a lot of insurances that are not just the traditional insurance that you might think about.
Fiduciary too, to cover their 401k liability. And,
We probably have directors and officers or
Mm-hmm.
errors and emissions insurance coverage.
Yeah, you can see what happens here. You go down this hole and there's just so many insurances. And the thing is, when a lot of times when Brian's handling stuff from the financial standpoint, we're looking at, is it a cost of goods? Is it a something I could directly apply to a job as a cost? And so many times we talk about bottom line, like we're trying to get to what is our profit? How well did we do? And for the most part, the insurance has no impact on how we make money, on what we do, but it has a direct impact on that bottom line. In other words, for me, when I look at it, if you're telling me 10%, well, that means that if we hit our targets at 9 point whatever, 9.8% that we shoot for, that means we were, if it wasn't for the insurance, we could have been at 19. Now, I need the insurance. I have to have the insurance.
Yeah,
But my
slow down
point
there. We're
is,
not getting rid of
thanks.
insurance.
I'm not getting rid of insurance. My point, Bryce, is it's not a number that is facilitating the work. So it's not something that you can even control. It is automatically coming off of when you're done taking
Yeah.
everything else away, you have to pay that. And
Yeah,
so
and
we really need to keep that
a big
number as low
component.
as we can.
Yeah, a big component of it is required to do some of the work we do. We work as a sub in a lot of scenarios. Our GCs require a certain level of insurance. Uh, Even when we work as a prime, our client wants to know that we're insured. We can cover the damage if there is any. But and so that cost never really goes away. I think our bigger driver though is the things we can control and how they impact cost.
Well, not only that, but one thing that is important is that, as we have this thing called a Veta that we work through for certain
Yeah.
clients, right? But the clients could continue to require more specific things every day. And some clients won't even let you bid to them if you don't have certain parameters, what's your work comp EMR number? We're using jargon. It's not really important, but basically, if you don't hit a certain threshold, you can't even bid the job, even if you're qualified to do the work,
Right.
but your insurance stuff doesn't right, you're out.
You could have the right people, the right experience, the right equipment, all enough capital to fund the project. But if you don't have the insurance or the qualifications, or if your insurance records aren't clean enough, yeah, you're next man up.
Well, and also I think that some of our longer term employees, like we've used subs for years in the past that we might know, we trust, they do great jobs, but unfortunately they don't have this stuff now. And it's being pushed down to us, which is getting
Right.
pushed down to the next tier, the next group of people we use. We can't use certain trucking companies, which were reliable. They were good people. We had no problem with them. But unfortunately, you know, that's how much insurance controls some of this stuff is that if they can't hit those boxes, unfortunately, we can't use them any longer.
Yeah, that's true. I mean, the subcontract pre-qualification process that we're going through now and starting is much more stringent than it's ever been, and most of it is safety and insurance driven.
And that is, it's a sad state of where we are, right? It's not about right or wrong or do we like it or not. It's just that is what it is for the kind of clients
It's
and the
the
size that
reality
we
we're
are.
living in. Yeah, it's environmental, it's client driven, but yeah, for
Well,
sure.
and it's, Ford, you've brought it up that anymore, a lot of times the work that we bid, it's not a question of if you could do the work. And I don't want to go so far as we say tongue in cheek, it's not really about if you could do the work. It's about can you do the paperwork? But the assumption is you could do the work because there's a lot of other people that can do the work. But the question is, could you meet their guidelines? Could you get a Veta done? Could you provide the insurance they want? Do you have the bonding capacity? Do you all these other things that make the work that we do go? It's not just as simple as a guy in a backhoe anymore. You know what I mean? It's a lot more complicated than that now, and there's expense to that we have to figure out how to absorb and how to mitigate increase in costs.
Yeah. And at the end of the day, all we're really saying here, I mean, the insurance doesn't go away, but uh, I think it's an important reminder to our folks that that ownership mentality, that ownership thinking, and strategic decision making, how can be super impactful to at the end of the day, whether or not we can go do different work, go purchase new equipment, etc.
Well, and even how it impacts us, even beyond can we qualify? Can we do it? How successful are we? Um, we always come back to that. Think about how many dollars it would take in revenue to make the money that's coming away when we have an incident,
Right.
and most incidents, and we've all had an incident, but most incidents occur, you know, it's just an accident. That's why the word accident exists because it was an
It was
accident.
not
It's
on
not an on
purpose.
purpose.
Yeah.
You know what I mean? You didn't consciously do it,
Right.
but that's where we just need to take a second.
But
Just
could it
make
have
sure
been avoided?
it
Yeah.
could have been avoided.
Did you do your own mental checklist?
Right.
Did you know the environment you were in, your surroundings?
Yeah.
Well, I think it also boils down to that, we're talking about how the expense happens and then we do have to pay it. But us doing the right thing on a daily basis doesn't make us save money, but it doesn't cost us more money, I guess is the bottom line to
Right.
that. Because like
Yep.
we have a baseline we're going to pay no matter what,
Yes.
but it can go up from there in the wrong direction. But us doing things the right way and being safe and taking care of these factors will actually keep us from having to continue to go up. We'll be able to level out and be able to manage that number so that it'll keep us in check. It's not that
Right.
we can't drop it in half. There's none of those fun things, but there's little savings we can have by doing certain things. That's why we have Blair here to help us with certain parts of this, to help us keep moving forward in this direction. We had the safety day here a couple weeks ago where everybody got some training and got some new safety gear and constantly trying to improve on this factor. It all ties together. It's one big thing. We just wanted to talk about this one particular piece because how important it drives so many other factors, and it's in the background. It's not something anybody sees on a daily basis, but it drives so many decisions that we have to make.
Yeah, absolutely. Yeah. We could probably talk about insurance for a long time. Yeah.
Oh, we don't want anybody to fall asleep out there. So
yeah. And
We could go back to commercials if you want. That would wake them up.
sorry, we don't have Aaron Rodgers or Patrick Mahomes in here as a sneakerhead.
That's
so.
a good one. How about the Aaron Rodgers one where he hits the golf ball, he hits the hole in one?
Yeah.
Yeah, that's a good one too.
All right, folks. Thanks for joining us. We look forward to having you back another day.